Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, July 1st, 2019, about 3:27 p.m. Central Daylight Time. This is where the stock market finished out, and some of the indices a new all-time high close, so let's applaud that. The safe havens of the day fell apart, be it the gold market. If I come over to the yen, it was down. Bonds and notes, they were both lower on the day as well. OPEC has reached within themselves an agreement to do an extension of the production cuts through March 2020, so that's a 9-month deal versus a 6. It now goes to all the governments, but there should be no problem getting that through. And in the grain markets, a big down day today. Now, you'd ask yourself why? Well, all you had to do is look at last week's reports, and you could see that we've got more crops than the market thought we had. And the government again issued a statement today saying that they're going to do another survey that we'll see in August, not July, which means we trade blindly for a certain period of time because they're wondering how do they plant more corn than they did last year at this time with all the flooding that went on. Big questions. In any case, you trade the numbers that you have. We saw the crop conditions report come out today, very much what the trade was looking for. So I don't know that the market will be much either side of unchanged off of that report. Maybe you get a reaction because you were down so hard today. When we look at the weekly area chart of closes, we've now gone from a high close of 902 3/4 back down to 885.5. So we're down about 20 cents. Support in the market, if it continues to break, I'm going to guess around that 872.5 level, the 18-week moving average of closes. When we take a look at November soybeans, we had today a big reversal to the downside. So until today's high is taken out, you've already filled one gap. This was filled earlier. This still leaves the potential, and that's all I could say is the potential. If the market wants to break hard, to fill this gap in the 850s if the market wants to go there. I know it sounds too far away and you'll wonder how it can happen. It's not what I'm saying. I'm saying it's a gap on the chart. Gaps often get filled, not always, often. When I take a look at the current swing line, and what swing lines do is you take a chart like this, and when you put the swing line indicator on it, you're able to see is the market patterning. Now, what do I mean by making a pattern? The pattern, and the word is pattern, not with the N, not without it. I spoke wrong there. The pattern is that of lower highs, lower lows in a downtrend, and it's exactly what we've got right now. Where's the market in relation to key moving averages? Well, the two that I use specifically on this are the 100-week average and the 18-week average in red. So the market is under both. That is bearish. So I've got the trend down. I have the bias down because the market's under the 18-week average, and it also happens to be under the 100-week. Where's the next support possibly? Well, the 880 level is the lower Bollinger Band. So that's one of the numbers that might come into play. Is the market oversold? Flat no. Momentum is pointing down. So what we have here is a trend that is down, as measured by lower highs, lower lows, the bias down, two levels of resistance on the way up, back at 913 to 916.25, and I don't think traders would want to see today's high of 934.25 taken out. That would put them back into wondering why is that happening, of course, and then you're putting into play, if it happened tomorrow or the day after, the potential for getting back to the upper Bollinger Band. When I come to the meal market, I'm in a bear play here too. Lower highs, lower lows, running the lower Bollinger Band. In fact, today, the market was able to settle under it. 308.50 is the lower band. You settled 307.20. Here's where the importance of that comes in. 95% of the time, the market will trade within the black band. So when you step out of them, what happens is the odds favor by a 95% margin. It's going to flip itself back into the band. It could be a combination of falling prices and the band dropping. I look to see if the market's oversold, and it is. I also look to see if the market's oversold and trying to convert itself to a word I call embedded, which means locked in. And that can only happen when the K and the D lines, the blue and the red, are going sideways under 80. We're not at that point. So here's a market that's again gone up to the 18-day average of closes today. I call that the line in the sand. The market failed at that number in an existing downtrend, came right back, First hit the first support of the 100-day average of closes at 311.70. That then told it went to the Bollinger Band, closed below it, but I'd be very surprised that it just runs to the downside. In the soybean oil market, the market came up today and got as high as 28.73. Now, the last high the market got was here on the swing line of 28.72. So you got up, made the higher high, and then fell right back down, challenging the 18-day average of closes. You're not trending. There's formidable resistance between 28.86 and 28.91, the 100-day average in the upper Bollinger Band. The first level of support's that 18-day average. Should you slip back underneath now, 2,700, that could give you the impetus to move down to the lower band, but you wouldn't be in a trend. No matter what you do, you've got a higher high, and if you take that out, a lower and low. So I'm going to view this market, as I mentioned to you last week, it's being dragged along by the beans and the meal. Look at how the corn market came unglued. The market on Friday fell apart, and today it added another 90 cents to that. So you've gone from 468 on Friday to close to a low today of 420 3/4. And here you are sitting down here at 922.5. And again, you caught this market completely unexpecting that the USDA was going to say, we've actually planted more corn this year than we did last year. Just look at the flooding that took place. None of us can figure that out, but we'll see what the government comes up with. You trade what you have. Is the trade pushing the market under the lower Bollinger Band? Probably not. The market closed 422.5. That number's 425. Don't be surprised if you bounce around. Let's assume I'm wrong. And let's assume the market does break again. Then 406, the 100-day average of closes, is the support. Where would you think resistance is? I'll pick the 449 3/4, but that's going to be hard to get back up to. That number's 27 cents away. I don't see anything on this chart that yet says that will happen. Get a Chinese purchase, it could be interesting, but wouldn't they buy beans over corn? In the wheat market, you've got a higher high, lower low. You're almost going from the Bollinger Band top to the bottom. The market is not trending. You have the higher high, lower low pattern. On Friday, the market finished the day at 527 1/4, underneath the 18-day average. So the bias was down, momentum was down. The next stopping spot looks to me like the lower Bollinger Band if it can drop a bit further. In the sugar market, battleground is very clear. It's the 100-day average of closes. You can see how it works right on the chart there. Now the pattern is also one of question marks. You've got a lower and low, higher high, fighting it now 3 days in a row, the 18-day average of closes. Should the market be able to close over this last rally high of Friday, which was 1284, well, get a close over that and you're putting the market into the 1303 zone. Could you just spin there if you got over it? Of course, momentum can carry. But right now you don't have bullish or bearish momentum. You're fighting for direction. You even see that in momentum here, where you're just going sideways in the slow stochastic. The coffee market, definite, strong market all of a sudden. Market fought back, tried to get back under the the upper Bollinger Band at the end of the day. It's the first move over it. I wouldn't be surprised if it pulls back into it. But this market is no longer in the bear trend that we had all the way back here. You have a different world at work now in the coffee. And until something fundamental happens, I wouldn't be surprised on pullbacks to see support. Is the market overbought? Definitively. Is it embedded? It is not. So it's hit its upside target. I wouldn't be surprised to see some money come out of the market. Similar to what we were talking about sugar, you've got cocoa. It's got a higher high, a lower low. It keeps fighting at the 18-day average of closes. Doesn't trend, just spinning its wheels in here, trying to figure out what to do next. It did get oversold last week, but was unable to get to the lower Bollinger Band. I don't know what to tell you on this one, because even if you go to the upper Bollinger Band, you have the lower and low, higher high. Seems a difficult market to trade. In the cotton, this market tried to stick its head out today to the upside, and it looked pretty good for a while there as it did it. And then by day's end, it fell right back under the Bollinger Band. The trend for the short term is up until the market takes out 65.90, support 66.07, momentum up, bias up, trend up, but you have hit upside targets and you've been failing. at that upper Bollinger Band to continue the rally. In the cattle market, the market had tried an uptrend, failed on it Friday. This was where you had the market. Now you have the outside day down. You step out of a trend. You're at the 18-day average, and you're fighting the battle right there. Still no trend at play as I see it. Feeder cattle's trying an uptrend. It's got the pattern of higher lows, higher highs. If we go back to Friday's action, you can see the market had a strong outside day up. So as long as you don't take out Friday's low, which was 134.40 from the looks of it, I still say the market's got the opportunity here with this type of pattern of higher lows, higher highs to maybe make a run for the upper Bollinger Band resistance. The 100-day average is way up there. The key is to not take out 134.40, but the bias up, trend is defined by the swing line up, and you can see momentum's going with it too. In the hog market, a lot of traders are banking on the fact that if there's a U.S.-Chinese trade deal, that hogs will be the beneficiary. I don't see that for the August contract, though. First off, got to get the talks started. Second, the talks have to cover intellectual property. Third, we have to see when the Chinese start buying. Now, could China start buying hogs without a deal? Of course they could. They own Smithfield. So they could buy all they want, put on all the tariffs they want. Doesn't matter. They pay themselves. So the answer is yes, but it's probably the further back markets that get it. We saw a pig crop report last week that is showing a slowdown in new animals coming to market. In other words, the breeding is slowing down. At the same time, you know that China's lost somewhere between 30 and 50% of their herd due to African swine fever. Vietnam has lost in excess of 10% of theirs. So the question is when and if China decides to buy U.S. pork. I used that two-part intentionally. When, if. No intellectual trade deal, they only buy hand-to-mouth whatever they need. You put it together, you try to come up with game plans, and that's what we do. Now, one of the things I pride myself on is writing a lot of research in a way that makes it easy for you. I read other people's, and they're 8-9 pages long. I don't have the time or the temperament to want to write like that. What I do is I write the headlines, and I do a lot of bullets. I'll give you like U.S. crop report. I'll show you all the numbers. I'll give you a quick reaction to it. I'll show you what tomorrow's reports, like tonight I'm already talking about what reports come out in the morning, what the trade is looking for. Then I'm already on Wednesday with GDP and other numbers. And the idea there is to prep you in that part. Going with my research, some people want my audio commentary. I put that out twice a day, typically, and then others want my videos in the morning. If you haven't seen what I do, I'd like to put it in your hands. It's that simple. And how you get it, it's pretty simple. Just call my staff. They can set it up. You can go to our website at www.iraepstein.com. Go under the word research. It tells you all about what we do and where you go from there. I'm Ira Epstein. You have a great day. Talk to you tomorrow.